Hi, this is Hyperwave. I'm Leah Wald, and I'm here with Tyler Jenks. And will be part 2 when we're going to start talking about hyperwaves in the Dow Jones Industrial. At the end of the vlog, we're going to talk about the current move in Bitcoin over the weekend. It's looking bullish, and we're going to take a look at the charts this morning. 2 additional comments. So we're going to start taking all your comments and questions and do them in separate vlogs as Q&A vlogs. It seemed like this is the best way to segment everything so that it's not just at the end. Additionally, this week, I'm really excited, we're going to have a vlog specifically about if there's any other cryptos that are in a hyperwave. So with that said, we're going to turn it over to Tyler to talk about the Dow Jones.
Great. Good morning. As Leah said, some interesting things happened over the weekend in terms of Bitcoin. And we sent out a number of tweets as we went progressively higher through all of the various resistance areas we've talked about before. So we've got some good news on that front, and we'll get to that at the end of this. This will be fairly short, but I think very interesting for everybody because we're going to talk hyperwave. But specifically, if you remember, those of you that watched, we did a vlog on what we called funky hyperwaves, which are just hyperwaves that act a little bit different than the model. And we named 4 or 5 different ones. And then we started talking about the Dow Jones Industrials. And the more I thought about it after the vlog was over, we need more explanation. And that's what we're going to do for the next 15 minutes or so. So what I will do is I am going to do screen share, and we will look at some rather interesting charts. And we will start with, of course, this one. Can you see that okay, Leah?
I had myself on mute. Yes.
Okay, excellent. So everybody now knows, or many of you now know, that this is what I call the archetype hyperwave or the model hyperwave. And it's a composite of hundreds of hyperwaves that I've studied over a 40-year period. And many of you really understand it because you've been asking us some excellent questions about where we are and what the probability is that are we still in a 5, 6, 7, or are we still in a 2, or are we still in a 3? And the best way I think for me to explain that is to take a look at, first of all, the current hyperwave looking Bitcoin chart. And I've got a bunch of lines on here, but there are important ones. I've got these 3 lines at the bottom. The first one going across here is our phase 1 line for hyperwave. The next one over is the phase 2 line for hyperwave. And this third one is what I believe is the current phase of our hyperwave, which is phase 3. And I'm not going to go into how I draw that conclusion right now. And I'm not saying that I am absolutely saying there's no other way to interpret this chart. I'm simply saying that because on the down candle right here on the week of February 4th, on very, very heavy volume, we broke through this phase line, but then closed way above it. And ever since then, we've been moving up for the last 4 weeks, 5 weeks all together, but for the last 4 weeks, including the current week we're in. So my point about Bitcoin and hyperwave is that if we drop back below this phase 3 line, I believe that the phase 2 line down here won't be able to hold it and will go all the way back down to below 1,000. But I also said I don't believe that's the most probable outcome. I believe the most probable outcome is that we're going to work our way higher until we finally get above 19,666. And then all questions will be over in terms of where we are in the hyperwave. But we're a long way from that. We've made a lot of progress, but when you see this on a larger chart, the last month of grinding higher and higher and higher has only got us about a third of the way back to where we were. So it is not a slam dunk at this point, but I believe that the odds have been tipped in the favor of this still being in a phase 3. There's some philosophical reasons for that. And we'll talk about those on a different vlog. But just in terms of looking at the chart, the other group of lines I have in here are, of course, the Fibonacci lines. And these are the retracement lines all the way from the peak, 19,666, all the way back down to 500 or so. So this is about as complete a Fibonacci analysis of the Bitcoin movement over the last 3 years that you can get. It would be possible just to take it down to this low or to a previous high, but I like to look at it this way. And let me just summarize what you're looking at relative to Hyperwave. This line is the 23.6% retracement of the entire move up, which comes at 15,254. This line is the 38% retracement, 38.2, which comes in at 12,522. And we're almost halfway back up to that one. The one we just broke through is the 50% line, which came in at 10,315. We're a couple of 100 points above that right now. It would be very nice to get up and at least touch, if not break, the next one up at 12,522 for several reasons. But right now we're caught in between these two Fibonacci lines. But it's important to note that the 61.8% Fibonacci line at 8,106 was really a very important line. That is, that's the line you would like to be sure holds in a retracement of a big move. 50% would have been great, but we didn't hold that. But we did hold the 61.8% line. And look how precisely that line supported price. On this huge down candle, we broke below the 61.8 Fibonacci line during the week, but we closed slightly above it. Then on the huge down turnaround week that penetrated my phase 3 hyperwave line, we also destroyed the 61.8% Fibonacci line at 8,106. But look what happened after that penetration, this double penetration of the Fibonacci line in my phase 3 line. We closed all the way back up, slightly above that Fibonacci line. The following week, the big up candle, we started right 40 points above that Fibonacci line and never looked back. And we have not looked back until we got up to the 50% line and then broke the 50% line. And now with last week's action, which I guess actually is this week's action now, we are clearly above the 50% line, headed to the 38.2. Okay, enough Fibonacci, enough my lines. I want to go right to something we started talking about in our last vlog. Towards the end of that vlog, my microphone went dead. We had pretty much completed my thoughts, but I want to start over again with this chart of the Dow Jones Industrials, because to me, it's a wonderful little anecdote, because I was using Hyperwave when this occurred, which was back in 1980, 81, 82, 83, 84, 85, 86, 87, 88, 89, and 90. This is a 10-year period in which I actually tracked one of my first hyperwaves in real time and took action for clients as well as myself based on it. This is where the Dow Jones Industrial had been in a phase one hyperwave line. In the case of the Dow, this line extends back 17 years. It's one of the longest phase one lines I've seen ever. And it started back in 1965. The Dow Jones Industrials couldn't get above 1,000 on the Dow, and it tried over and over again between 1965 and 1982 until right here, for the first time in late 1982, it broke above 1,000. And I began thinking, wow, that looks like a phase one line. Maybe we're going to go into a hyperwave. And over the next 5 years, we did, with a phase two, a phase three, a phase four, and the stock market crash of October 19th, 1987, the largest stock market crash in US history in terms of a one-day drop of 22%. That would mean, in terms of today's market, a 10,000 point drop in one day. We're at 25,000 right now, and a quarter of the, no, I'm sorry, it's about a 6,000 point drop. It would be like a 6,000 point drop in today's market. It was earth shaking at the time. But, and because we broke the phase four line on a weekly closing basis the week before the crash, I was able to get clients completely out of the positions they had, 0% in the market, and became a hero to a small number of people. And then finally, the story got picked up in a number of newspapers and magazines and stuff. But my point is that this was a real-time, year-by-year development. After it occurred, I made my first big mistake with hyperwaves, the analysis of hyperwaves. I created hyperwaves, I studied them, I found all kinds of examples of them, and then on my first go-around, after playing around with it with gold and silver back 10 years earlier, it seemed to work perfectly right with the break of the phase four line. But then, because we came down and we touched this line, I believe we were going to go all the way back down to 1,000, and we never did. We kept climbing for the next year into 1989, kept climbing, and then negated the whole analysis with this close above the previous close. Remember, a phase six cannot go above a phase four. It's never happened. And it still hasn't happened even with this example. Why? Because of this line, the phase two line. Now, I know it sounds pretentious and it's hard to understand, But I have said over and over again, if you go back to the last 15 vlogs we've done when I'm talking about Hyperwave, I always make sure I say that each of these lines extends all the way to infinity. And the obvious reaction is, you know, what is this guy smoking? Who cares that a line goes all the way to infinity? Well, the reason I keep saying that is not only what we are now witnessing in Bitcoin and what we could be witnessing in things like Amazon, Netflix, and Tesla, is that these lines become very important in the future. And to prove that to you, I'm going to show you why what this was what I called a nestled hyperwave that was nestled inside a much larger hyperwave that I should have been able to predict back in 1988 when we stopped right here on the phase 2 line after the crash of 1987. I did not know what I know now back then. So to get a better grip on that, I'm going to move to another time frame, which is 1990. Remember, this first chart goes up to 1990. So right up to the end of this, right when it became clear that this was not going down, it was going up because we had just taken out this previous peak. So now the second chart is going to start in 1990 and look forward. And here's the phase 2 line going all the way to 2003. And you will notice what happened as we entered the 1990s. The phase 2 line held, 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 and then started on a phase 3 that took the market from 3,500 to over 11,500 by 1990. In other words, the first was a mini hyperwave that completed the first 7 phases, but the 7th phase ended right on the old phase 2 trend line. And then another hyperwave started with the phase 2, phase 3, phase 4, which happened to result in a drop from 11,500 all the way down to 7,000. And then actually went a little bit further later on in the development of this. But again, look what happened after, if you want to call this a phase 5, phase 6, phase 7, we didn't make it back down to the phase 2 line. The phase 2 line was still going all the way to infinity. Okay, so that gets a little tedious. If I break it down this way, it doesn't make a lot of sense. I tried looking at 1985 all the way to 2008, when we went into the deep recession that almost brought the financial market down. Notice that this line, whatever it is, held the entire move from 1985, 10 years to 1995, another 10 years to 2005, including the last chart we just looked at, and then all the way up to the crisis in the mortgage market, which dropped all of this down. So then I think, well, what the heck are we looking at? Because from that point on, we've again started up again with one touch, two touches, three touches in this acceleration. So to answer that question, I drew one enormous hyperwave, taking out the two interim nested hyperwaves to show you where the Dow Jones Industrials are right now. This chart goes all the way back to 85. This is the stock market crash of 1987. You can barely see it on the chart. But notice it comes back to the phase 2 line. And that phase 2 line also pinpointed the bottom of the 2007, 8, and 9 stock market crash, but held. Then we have been moving up in a phase 3. You've heard me say, and Tone Vase has said it, and a number of other analysts have said it, that it could very well be that the Dow Jones Industrials is on its way to 100,000. I happen to believe that. This chart explains one way it could easily get there. Because after this huge recession, including the September 11th, 2011 Twin Towers attack, that's all in here. A recession, the only time the continental US has ever been attacked in wartime, other during the Revolutionary War. Dramatic things happened. We tried to recover from it. Even a worse drop happened. And yet this phase 2 line was able to encapsulate the entire movement. If this is a phase 3 line, I suspect that we are not in a phase 4, although this is a very dramatic change in angle. I would imagine that this phase 3 line, which will go to infinity, is going to also hold any drop in the market. I don't expect the stock market, to drop even below this green line. I would love for it to come down and touch it and then take off again, knowing that there is this phase 3 line still supporting it. Okay, so some of you are thinking, well, you told us you were going to show us some funky hyperwaves the last time, and we did, but that's the weirdest thing I've ever seen, because Tyler, it sounds like what you're saying is that a hyperwave does not need to go all the way back down to its beginning, because if it's a big enough hyperwave, other phase lines will hold up the price. Well, that would be true if I could give you a half dozen examples of what I just showed you. I can't. That's the only one I can show you. I can show you bigger ones. For example, this one, which we looked at before, this one started in 1940s, late 1930s, and is still going on today. But we have returned all the way to the bottom. But look how long it took us to get there. You know, after this 5, 6, 7, that ended in this bottom right here was approximately 1985. So we have been in a 7 in US Treasury bond yields from 1985 to 1995 to 2005 to 2015, 32 years in a 7, and it finally got back and fulfilled the hyperwave archetype. Japan has not gotten all the way down to where it started. It came darn close. It dropped from 38,000 on the Nikkei all the way down to 6,000. But it really didn't get down as low as it should have. And maybe that means it's still in a 7. It only made it about halfway back up to its peak. So it's too early to tell. But my point in giving you all of this detail today is when I talk about the hyperwave in Bitcoin, and I'm saying, yes, it's true that this looks like a 4, 5, 6, and 7. Remember how I have stressed for months the fact before it happened that we need to hold 6,300 and then we need to hold 7,000 as this line went up. I was saying that long before we got to the top. And that's exactly what it did. And because of that, that's why I'm answering your questions. What phase is Bitcoin in? I am sticking to the fact that it is still in a phase 3. That will be negated if we break the phase line on a weekly basis, the phase 3 line, and further if we break the phase 2 line, which now comes in around 4,000. I don't believe that's going to happen. I believe we are starting an upswing as soon as we get above 19,666. We can forget about trying to figure out where we are. We know exactly where we are. We are still in a phase 3 headed much, much higher. Okay. I did want to talk about Bitcoin price. I'm running long today, but this is just as important a story, which is these 4 lines that I've drawn a long time ago, ever since the peak. Before the peak, I put in these 2 horizontal lines that I, in an earlier vlog, explained. I don't look at these as trend lines. I look at this as what I called a field line, which is a combination of both of these parallel lines. And it has a magnetic center relative to price, in which when you're above that field, you're drawn down to it. When you're below that field, you're drawn up into it. And you can easily overshoot to the downside or the upside that field. That does not mean that each individual horizontal trend line is not important. But where we are today is we have broken the downtrend line, which is the longer of the 2 lines. This is the uptrend from the bottom. This is the downtrend from the top. We have now broken through that, and I will make this bigger. We tweeted about it. It's a very important break. We tried to break it here, couldn't do it. Then we did break it. We came back down and tested it. It held. We got above it. Now we got above the 11,100 line, retested it, and now we're moving up away from it. We need to get far enough away from this field between 10,100 and 11,100, but I believe we are doing it now. And I believe it started this past weekend, but we've got a lot of touch points going back down that are going to act as support. Whereas before that, all of these lines were resistance, and we now gotten through all of them. So the next thing to do is we have to take out this top, which comes in at 11,788. That's not far away. And then there will be minor overhead resistance points, but I think we're on our way. So with that, thank you very much. Please let us hear your questions, comments, criticisms. If you put them in writing, either on this channel or on the Lucid Investment Twitter account, we will get to them. We're trying to answer every one of them because they are terrifically good questions. So thank you very much. And with that, I'm going to turn it over to Leah. And
thank you, everybody. Thanks for watching. Looking forward to more of your brilliant questions, as Tyler said. Yeah, that's all I have to say. Enjoy this upsurge in Bitcoin right now. It's looking good. Have a good day.
Great. Thank you. Bye-bye.